Good morning, everyone. Aloha, Cisco. Good to have you back. Hey, Donnie, Stealth. How you guys doing? Marcus, what's up? Happy Friday, everyone. Happy Friday. And we finally got a liquidation. I was joking around with one of the guys in the room yesterday. He was like, maybe I should short overnight. And I said, actually, that's not a bad idea because, the overnight usually gives up some inventory. And that's exactly what happened. Let's go take a look. Sorry, I'm a little late, a little disorganized this morning. Let me just go and put the references. So overnight inventory is probably around 90% short. And look where we found the bid. We found the bid right at those single prints. We front ran them. The ones from 2 days ago. Nice, right? Found some nice bids down there. And let's go see. And yesterday I put in instructions on how to short before I went to sleep. And I basically said, I had the lower stops and I said, those are your targets. And if it takes those lower stops, you can keep shorting now. We had a really nice move down to 74.98. It kept going, took out the previous day low, right? Came down all the way here. And one thing that you guys are going to understand, well, you don't understand this now, but you will in time, is that when you take a market up on short covering and you let go of the bid, the whole thing just falls apart like a cheap suit. Because the only people who were buying this move were people who were trap short, right? So when those short sellers, when they see, right, when they see offers, when they see that the sellers are desperate to get out, they'll be bid here, then they just keep dropping their bids lower. And they suck those people out into selling at the lowest possible prices, right? So that's a really cool thing. That's one thing if you understand, right? You saw the golden retrievers joke, yeah. Well, that guy sometimes, I have to put it in there, right? That these instructions are so simple that a golden retriever can understand it. So hey, you gotta have some humor in this business, right? So yeah, that's what happens. Nice big liquidation. That's beautiful. Now let's see if we can stay inside, the previous day's range or not, right? Because now we're back inside yesterday's range. Let's see if that holds, okay? So I did up a balance zone here. So my balance is 74.63 to 73 and three quarters. And you'll go, yeah, Jay, it's a bigger zone. Yeah, it's a bigger zone because the range is bigger, right? Simple. Bigger ranges, bigger cost basis zones. Smaller ranges, smaller cost basis, right? Pretty simple. It's not rocket science, right? It's just cost basis and inventory. So that was a great liquidation. Now let's see if this liquidation brings more liquidation, or do we do the same thing that we did a few days ago when we dipped underneath 73.91? So are we just going to trap shorts, right? Or are we going to get some real selling, right? Looked inside yesterday's range, rejected out. Sorry, had to sneeze again. Jeez. Okie dokie. Let's see what's next. It's still the same cold, Moran. It's a long-lasting cold, boy. Oof. A real pain in the butt. But at least I got most of my voice back. Could be worse. So I missed all the action. That short all the way down. I woke up, turned on Sierra chart, and was like, wow, great. Finally got a decent liquidation at night. Right? Lets all of those people who got trapped short, they can come in and do some covering. It's a wonderful thing, right? Took every single stop and the previous day low. Now let's see what happens when London opens in 5 minutes here. We get some more liquidation. So right now you can see that there's a seller right here at 80. Right, you see the seller, right? As soon as it comes to that 80 level, boom, there's a seller. Now let's see. Now let's see, we got a question from Howard here. How do you stay focused? Staying focused is a direct result of discipline. So he says, when I get a win and then you stop being focused, how do you fix it? Well, I advise as soon as you lose your focus to stop trading. If you're aware of that, you've won half the battle. Most people don't even know when they've lost focus. And they just continue trading and they'll keep losing money. So you're already ahead of the game if you understand that you are losing focus. Now, say you want to go long here, right? Say you're taking a long and you're buying the 80, 81 area, right? Your stop will be just underneath the previous day low. You can use this area here as your stop, right? Make sense? But they're going to be sellers because you've got inventory all the way up, right? So what you want to do is you want to make sure that now you've seen that there's a seller here and you know that there's going to be sellers here, right? So if you're buying the 80s, put your sell orders out and see if it holds the previous day low. Okay? Does everybody understand the mechanics of that business transaction, which is what we call a trade? Right? You're buying an area because you think they don't need to sell underneath it, right? You're watching the offer is moving higher, right? So if you're buying that area, your stop is going to be here, right? That's how you take a trade at a place that's not at an edge. But you have to realize that taking a trade here as opposed to doing the look below and fail at an edge is a lot more risky, right? At the edge, you get your best bang for the buck. When you're in the middle here, you're taking far more risk. Does that make sense? Right? And the probability that you'll get stopped out is far greater than at an edge, right? Because the traders at this of size have not worked out that edge for you yet. That's why it's always nice to take it a little higher once they've cleaned that area out, right? Not just exactly at 80, maybe buy 82 and sell 85. You know, once between 80 and 81 is owned and clean, then you can go and buy 85. Does that make sense? See how it's mucking around with this area? So let's see if it comes down and takes out this area which is bid. I'll make that blue. Because if it takes out that 78, it's going to come all the way back down to 73. See? It's absolutely amazing how much information a 1 minute candle chart will tell you. It's absolutely amazing. It will tell you so much information, but nobody pays attention to it. They go, oh, it's too choppy, it's too fast, I can't trade that fast. All sorts of excuses because they don't understand what's going on, right? I need to trade a 15-minute candle. Right? And, well, you're not going to do that any better than a 1 minute, trust me. Right? Trading a 1 minute candle does a few things. It teaches you to think and act quickly because you guys don't have a sense of urgency when you're trading, right? You need to have a sense of urgency, especially in these markets, because if you kind of fall asleep, you sit around with your thumb up your nose, you're going to make mistakes. You're not going to be on it. Trading a 1 minute chart, especially when you're a new trader, teaches you urgency. It teaches you how to move quickly. It teaches you how to get out of bad trades quickly, right? Very important, right? So the London Open did not take out the previous day low, right? So their bids there, but they are sellers just a few ticks higher. So if you are long, right, put your sell orders out, my friends. Make sure that you sell your product. Don't wait for an invitation. Say you're long 80 and 3/4, put it 81, 82, sell those contracts, right? Sell those contracts. Don't wait for an invitation, right? So I bought 81 and I'm out already at 82 and a half, right? Just on a couple of micros because I'm testing the market, you know? Because there's going to be sellers at 83 and there's going to be sellers at 85, right? So that's how you trade a low, right? You give it a little bit of time. You never want to be the first one to buy it. You let the large traders come and establish the bid. And then when London opens, when it opened, it proved that the lows were getting higher, which is what you want when you're long. Simple, common sense trading. There's no mystery to this. There's no indicators. All you need is the ability to pay attention and draw a straight line. That's all you need. Right? Drawing the straight line's the easy part. Paying attention is the hard part. And knowing what to look for. Right? So, number one, you're taking the trade and you're not at an edge. So okay, you know what, this is a bit more risky. Do I want to put capital at risk if I'm not at an edge? So if you're a new trader and you're not quick, practice this kind of thing on the sim, right? Now I've told you what to look for. What you need to do is you need to rewind this video, right? Rewind it and watch it over and over and over if you're a new trader. Right? Because I ask a lot of people, they'll ask me questions and I'm like, Did you watch the video? I just talked about that, and they're like, "Oh, I was listening to you on my earphones while I was mowing the lawn. That's not gonna cut it. It's not gonna cut it. You have to watch, you have to pay attention, you have to make notes, you know. So as soon as you find where the bid is, then you know there's a seller. When it takes out that seller, you go along and you put your stop underneath that big reference, right? What's the other thing, right? And then you sell into strength, right? Now say I was long that 80, 81 again, and I didn't sell 82, 83, right? I'm back to where I started. Because why? We've been in liquidation all night. We're not going to clean up all the inventory instantly, right? It's not instantly, all the selling's not instantly going to shut off and the market's going to rocket back up, right? Make sense? Hey, Boxcar Willie, what's going on? Okay. And now it's just chop, right? The overnight point of control, which is just a fancy way of saying where the inventory is based, the cost basis is here, right? We'd like to see that move down somewhere here, and you could see good accumulation, like maybe just right over the previous day low. The upper stops are targets if you're like position long. If you're position long over the previous day low and you're working a position, those are your upper targets. Nice back and forth here between 80, 82. Any questions? Sellers have moved up a little bit here. 83. Hey Jerry, what's going on? How you doing? Okay, we got sellers at 83 and they kind of stopped selling around 80 and a half. Not very exciting right now. What I'm looking at is, can we stay inside yesterday's range? I have a feeling we'll probably flush it down again. Because not everybody sells at the same time. Yeah, 3 points, it's a bit tight, right? So you saw the other thing a candle chart, a 1 minute will tell you. Look how different the business is from here to here. See how different this is from that? So it's telling you the business is changing, right? Big candles and big orders, bigger range, and then all of a sudden it's tight and slow and tight, right? And the tape slows down a little bit. Here comes that test of yesterday's low again, and we're going to test that 78 bid, okay? If we lose that 78 bid, we're going to be looking for 73 on the downside and then possibly 68. So say you're a short seller, right? And you want to short when it comes out of yesterday's range. You want to see a little bit more follow through. And you know that there's a buyer at 78. So you need to break that 78 and we haven't done it yet. So you go and draw a line here. See? Because what it could do is it could come down to 78, catch a bid, and rip right back up. What I'm trying to show you this morning are details. See? See how it caught the bid? Right, we got down there, boing, right? Okie doke. Your puck moved down? Mine hasn't yet. Probably will soon here. But do you see what I mean? We didn't get down to 78, so there's no short, right? Because I was thinking, okay, we can short it when it comes down out of the previous day's range. But because of the candle chart, right? So people who were short here just got caught, right? If you were just trading market profile. But because of the candle chart, and we saw that there was a bid here, right? Yeah, so the candle chart saved us from taking a bad trade, right? Because I told you if it gets down to 78 and it can't break 78, it's going to bid and pop right back up. And it's exact. I told you that right before it happened. So it's like having, check it out. If you understand how the business works, it's like having an indicator that's going to tell you what's going to happen before it happens. Wouldn't that be nice? What if I could tell you, I could show you a way to trade and look at the market that you could anticipate things before they happen and be prepared for them? Is that something that you would be interested in? You know, instead of looking at lagging indicators and looking at things that don't work, right? And just continually losing money and getting frustrated, right? If you could look at small details that are free, they don't cost you anything, right? Would you be interested in raising your level of intelligence so you could actually, even if you didn't go long at 79 and sell 82 because it's a tight range, at least you're not shorting and getting stopped out and losing money, right? And you guys should all be saying yes. You should all be saying yes. Exactly. And you know exactly where the seller is, right? right? You know that there's a seller here. You can see it plain as the nose on your face, right? Boom, boom, boom. They're selling there. They've been selling there for 10 minutes almost, right? And they stopped selling here, right? So, but you don't notice these things if you don't know what to look for, right? A lot of people will look at this chart and they'll disregard it. But the information is insane. Now look, they're lifting that offer. Remember what I said about 85? If you're position long, say you bought a little position here. You bought 10 or 20 contracts. Start selling them. Put your offers out. If it takes that stop, it might just go like this and you want to get filled, right? Now the next set of sellers are going to be, where are they going to be? They're going to be up here. Look, they're right here. What a coincidence. Look, there's that stop here. It's right here. This and this are the same thing, right? Yeah, there are singles. You're right. Thanks, Moran. And they just got filled. We ran out of supply. We ran out of supply underneath 83. Now look where we're going, right? Remember, so if you're position long, right? If you were long 10 contracts, let's say 81, right? You should be out at least 6 or 7 of them by now, right? And you should have your offers out at 86, 87. You know there's a seller at 88 and a half, 88 and a quarter. You want to be out before that seller steps in and whacks you, right? Because there's those sellers are there. They're going to be there again, and they're going to want your customer. If you're long product at 81, you should be out of that trade by now. You know, even if you could sell and make 3 points, even 2 points on 10 contracts, right? That's how you position trade. That's how you position trade intelligently, using the information the market's giving you as feedback, right? This way you're not hoping and wishing and praying that trades work. You actually have a solid business reason for taking the trade, and you have a way to get profitable, right? You should have been out of that trade by 86, 87 at the most. Position long 81, out at 84, 85. You know, you can't beat that with a stick. I mean, I tell you. You know, 3 points on one contract is 150 bucks. Right? On 10, that's a $1,500 trade. Right? And that's how you make 30 grand a month. You do half that trade twice a day, or that trade once where you have a little bit of intelligence going for you. And there you go. I mean, how many retail traders are making 30 grand a month? And what was your risk? If you were long 81 and it got underneath 80, you'd probably start selling a few contracts, right? And if it took out the 70, 79, then you sell a few more, but you got to be able to manage your position. And your risk was 78. Now, you're going to take a loss if that trade goes wrong, but you have to have the account size to be able to handle that business expense. Right? Trading losses are not psychological barriers, they're business expenses. Getting stopped out and taking losses on positions that don't make money, you have to do it quickly. You have to shed risk very fast. That's why I want you to trade 1 minute charts so you get a sense of urgency, right? Because trading a larger time frame means you're just going to lose more money, right? Because you have the luxury of time. You think you do, but you don't even understand what's going on. How do you know what's going on inside a 15-minute candle? Did you see over this last 15 minutes how much information this market gave you? That if you were looking at a 15-minute candle, you just see that. What's the good in that? Makes no sense. And especially if you don't know what you're doing, it's even worse, right? It's not that I want you taking 300 trades a day using a 1-minute chart. I want you to be quick so you know how to take advantage of opportunity, and then you're not sitting around getting angry and frustrated. You know, even if you had made 500 bucks on that trade, you had done 5 contracts, right? Or you made $700, or even made 500 or 300. That takes so much pressure off you. That's another, and that's why you want to trade Globex, because opportunity is there. I know a lot of people who trade Globex and they don't even look at regular trading hours. They'll just watch it, but they don't. You know, if you make $1,000 before the market opens, why do you need to go and give that back? Just chill out. If you can make money trading Globex, today was a good Globex. Big ranges, lots of opportunity. Notice how today's Globex have been very, very different from the ones of the week. You guys? Hello? Anyone? Do you notice how today's Globex session has been completely different than the ones all week? Bigger ranges, more opportunity. That's because there's a liquidation. Good stuff, Moran. Moran's awake. Nice to see. Right? She's on it. Right? Very, very different. The business is completely different today than it has been all week. Why? Because we finally got a liquidation. Liquidation creates opportunity. Right? Liquidations create opportunity. That's why you got to show up and watch each Globex. Sometimes it's going to be really bad, right? And everyone was waiting. The last couple of Globexes were like, oh my God, you know, maybe we could squeeze a couple of points here, a couple of points there. They've been so tight, you know. Oh, you're awake with the grandson. That's cool, right? So can anybody tell me what's going on now? What are we doing now? Two coffee in the week. That's good. We are selling this position here. That's the accumulation, that's the distribution. If it goes on sale, it comes back down here. Exactly, distribution. Business is still going on. So you see these numbers here? So, you know, we were talking about buying 5 or 10 contracts. Wholesalers are long hundreds of contracts here and selling hundreds of contracts here. Now that might not seem like a big range, but you know, if you're long 100 contracts at say 80 and a half to 81, and you sell 100 contracts at 82 to 84, do the math, right? You don't need huge ranges to make money, right? If you're a wholesaler. And you as a retail trader, all you need is 2 to 3 points on a trade. You don't need to hold a trade for 30 points. In fact, you don't have the skill to do it. That's why you guys screw it up all the time, right? And don't feel bad. Nobody has the skill to do a 30-point trade right off the bat. You know, it's like giving somebody a violin and asking them to play the Sibelius violin concerto when you've never held one. It's going to sound like you're strangling an animal, right? You have to practice at it, and it takes years to be able to build positions. You don't do it instantly. You train yourself by scalping to be a faster trader, to have that sense of urgency, to understand the business. That way you learn how to manage positions because you don't just freeze when things go wrong, right? Howard, you learn how to focus because there's no way you're going to hold trades for longer or buy more size if you can't focus. If you can't focus and if you don't know what to focus on, right? You're going to be a doctor trying to do like heart surgery and you're going to be cutting at the ankles, right? You have to train yourself. Do it on these small scalps and get consistently profitable in small ranges. The other thing about these small scalps is your risk is so much better, especially when you're learning how to trade with the micro, right? You learn the mechanics of the business and your risk is so much better. And if you're using funded accounts, it's a lot better. You're doing these evals. You know, if things go bad, you can reset it for $30 so you don't blow up all your capital, right? So we've made retail trading a lot more. The barriers to entry are easier, but they still don't teach you exactly what's going on. Now what's going on? Can anybody tell me what's going on now? We were distributing above 83, but what happened? Anyone? Bueller? Are we under 83 or over 83? Sellers are competing, exactly. Putting on sale a little bit. There's a little cost basis here, right? If I go and I draw you a volume profile, you'll see, look at that volume. Right? You can see the volume. Matt, we're looking for buyers, yeah? Put it on sale under 83 and it brought buyers in, but the sellers are they're still there. Just remember we drew that line early in the session and the seller is still there. They'll sell there again, and if they compete lower, they'll come down to this 80 level. So if this was your balance, right? If this was your balance zone, then this would be a look above and fail, and your target would be 78. But if it can't break this area, then you know it's probably going to pop back up, right? Small details make a huge difference in this business. Tiny, small details make a huge, huge difference. Cool. Very good, Miran. Very good. So the offer went underneath there. It dipped right back up. All right, folks. You guys are quiet. You're ready for your weekend, I can tell. Thanks, everyone. Have a great weekend. Folks on YouTube, want to learn how to do this? Get good information so you can actually make some money? Come to tradingsyndicate.org. We'd love to teach you, right? That's our job, is to try and make retail traders profitable, right? And we will see you all at 9:15 Eastern Time, 2:15 London Time. Trade safe out there, okay? And remember, inventory is short, so don't get yourselves caught short. Have a great weekend if I don't see you, and we'll see you soon. Bye for now.